Hey guys, welcome to another video, and in this video I am going to explain how does the loan process works and what are the terms used in loan. Recently I took out a loan for my education at Purdue from SPI, and during this time there were few terms which were coming up again and again. For example, there was rate of interest, margin amount, also moratorium period. So I didn't know any information about this. In this video I am trying to compile all these terms and mentioning about this. I would recommend watch this video till the end so that you know what kind of experience I faced with SBI, what kind of experience I faced with Credila. I was also planning to go for Credila because it is much more comfortable there, but the rate of interest was too much, and that is why I went for SBI. I would like to also take this opportunity to thank you guys so much for coming and asking me questions for the live session. I'm glad you guys came. At any point of moment there were like 50 to 60 people watching, and I'm planning to do a live session every Tuesday. So if you're new to this channel, consider subscribing. You can ask me doubts regarding MS application process, loans, shortlisting universities there. Also, my email address is given down in the description as always. You can ping me, you can email me there, you can follow me on Instagram and DM me regarding your doubts. In this video, I'm going to mention few points which are important for you so that you can understand your education loans better. See guys, 70 to 80% of us are not being funded by the universities there, and also we cannot self-fund. So that is why loan is very important for us. I know people do not talk about money that much, but money is the crucial part. US education costs around 30 to 45 lakhs to 50, and it can go up to 1 crore. So it is very important for you to know how you can get that money to fulfill your dreams. Okay, starting, I am going to mention the following points in this video. I'll be mentioning about rate of interest, margin amount, loan disbursement, repayment penalties, with or without collateral, moratorium period, and processing fees. I'm making this video right now because since 2 months I've been going through this process. Everything is fresh in my mind. Similar to my US visa experience, that is why I made that video. Okay, starting with rate of interest. I think everybody has taken an economics subject in our engineering courses, and everybody know what is rate of interest. That is the amount you have to pay extra to the bank on the principal amount if you're taking a loan. If you're taking money from anyone, there will be interest on it. So Credila was offering me 12.5% of rate, SBI was giving me 10.5%, Advanced Insurance was giving me around 12 to 14%. They said it would be 13%, and one of my friend has taken from PNB, so he mentioned that the rate was 9.45. All these rates are variable. It depends on your GRE score, on your father's income, what kind of property do you have, if you're taking loan with or without collateral. These are the minimum rates the companies were offering. I think Credila has given loan as low as 11.5%, but that is a very rare case. And also, if you're a girl student, you'll get a 0.5% rebate on that. So if you're thinking why I am telling you about rate of interest so much, is because it is crazy how much more you have to pay, even if the rate of interest is 1% more or 2% more. If you're taking a loan amount of 40 lakhs with a 10% interest rate and loan tenure is 3 years, then the interest payable is 6,46,475. Whereas if you're taking the same amount of loan with interest rate 12, you'll have to pay 7,82,861 rupees. Now that is 1,30,000 more, and that is a big amount if you're paying by yourself. I know if you're earning in dollars, it might seem that it is just $2,000, but over the period of time, it is compounding monthly. So it increases. That is a topic for separate video. But I would recommend still go for the least rate of interest. Okay, moving on to the second point, moratorium period. During your education, the banks understand that the student cannot pay his or her loan, and that is why that 2.5 years or 3 years of period is called moratorium period. In that period, you do not have to pay anything to the bank. Like, all the interest will be starting after the 2.5 years or 3 years of moratorium period. It depends on banks to banks what will be the moratorium period. Moratorium period is just to be safe that the student doesn't have any kind of burden while he is studying. Also, there is an option if your parents are paying just the interest, not the principal amount during the moratorium period, you'll get 1% off on the already given interest rate, and also your parents will get tax rebate on it. I'm going to make a separate video of rate of interest, and I'm going to mention all these things in detail. The third point would be margin amount. See, the banks has to make sure that you do not misuse their money, and that is the reason there is a quantity called margin amount. For SBI, the margin amount can be as low as 15%. To give you an example, let's assume that your education will cost you 40 lakhs and you are taking a loan of 30 lakhs. So the 10 lakhs amount would be the margin amount, and the 10 lakhs out of 40 lakhs is 25%. So in the document, in the sanction letter of your loan, it will be mentioned that you have a margin amount of 25%. Now, how does that work? Okay, let's take an example here. If you're taking out 10 lakhs for the first installment and your margin amount is 30%, then the bank from your loan account will disburse 7 lakh rupees and 3 lakh rupees will be disbursed from your account, from your savings bank account or from your parents' account. Why is this the case? Because bank has to be sure that you are also paying and you're not misusing any of the money which bank is giving. I'll post a couple of links regarding all these information. You can read it there as well. I just wanted to give you an example so that you have a better idea regarding this. Okay, repayment penalties. You have to make sure while you're taking a loan out that there's no repayment penalty. See, you can take a loan tenure up to 15 years or up to 10 years. And that means that you will be paying loan amount by installment for 10 years. Usually if you're ending up with a job in abroad, you can pay that loan in 2 to 3 years, maximum 4 years. But more time is taken just in case you do not land up a job and then you need more time to pay up the loan. So if you are paying early, then there was no repayment charges. This is because if you're paying on a longer tenure, right, then they'll get more interest out of that money and it is safe for them. So that is why they have this repayment penalty. In the case of SBI and Credila, there was none. I would recommend that you check that if there is a repayment penalty or not. The fifth point would be processing fees. Usually the banks charge around 1% of processing fee. For example, if I was going for HDFC Credila, they were asking me for 1%. 1% of a 30 lakh loan would not seem that much, but why would you shell out 30% if somebody is doing for much less? I went for SBI, they charged me 10,500. They asked me for a check of 10,500 for processing fees. And they returned the processing fees after my loan was sanctioned. If my loan wasn't sanctioned, then they would charge me that 10,500 rupees. But they did not charge anything from me. So I would recommend that you check what kind of processing fees is there. We tried to bargain regarding the processing fee from HDFC Credila, but they were very strict on this that they will have a 1% of processing fee. Moving on to the next point, there are two types of loans, with or without collateral. I'm going to read it from my laptop screen, what is considered as collateral and what is not. So collateral in the form of land, building, government securities, public sector bonds, unit of UTI, NSC, KVP, LIC policy, gold shares, fixed deposit, bank deposit in the name of student, parent, guardian, or any other third party. This is considered as collateral. You can give your land, you can put your house as collateral. What benefit you will get in putting collateral is because bank is sure that there is a collateral in their hand. They'll give you a better interest rate. They'll give you a much more loan amount. So for example, if you're getting a loan at the rate of 12%, if you're putting out collateral, they'll probably bring down that rate of interest to 10%. For everyone, if you are asking me what is the best interest rate, I would recommend State Bank of India, PNB, these are the best. My friend took a loan from PNB, he did not have any problem. I took a loan from State Bank of India. I just sent out my fees recently and there were no problems at all. I hope that concludes the video. Thank you so much guys for watching. If you like this video, consider subscribing and until then I'll see you in the next one.